Hello and welcome to another update video about gold. So yeah, gold has moved down again. I know it is a market that frustrates a lot of people significantly here in the short term. There is a lot of up and down, a very choppy price movement. We did move down, not unexpected. We've run into resistance. That was when we made the last video. I think we were basically here at the top, and I mentioned to you, as long as we stay below this low at 1837 or 1838, I will assume that this is just a wave B in red and that we're going to run into that green support area next. That is my strong expectation, because I believe that this possible 5-wave move here to the upside is finished. Anybody who is frustrated with gold, because it has been really choppy here over the last few weeks, even though the idea was to go higher, which we did, and then at some point here to be finished in this ascending wedge. You break out of this wedge to the downside. It's a bearish pattern. It's a pattern of exhaustion. So it's not running in an unexpected way here, but it is very choppy, and it's never great to have a wave 5 which is an ending diagonal, because it makes projections rather difficult, because it's not an impulse, at least not the wave 5. It's a diagonal, and diagonals, they don't normally adhere very well to Fibonacci extension targets and so on. But I'm glad we're now moving down at the moment, at least. I mean, this is not confirmed yet. I'm going to show you why. So my idea at the moment is we finished off the wave 1. This is the bullish perspective, by the way. Of course, there's a bearish one as well, but we won't know really about the bearish one until we have a test, basically a test of the bullish scenario here in this support area. Because what you get, when we have, after a long downtrend, and we have been moving down for a very long time, we've come into this support area. That support area was defined already back in February, I think it was, or March. So we've come from a level of around $2,000 down into this support area. This is the support area where already, like back in March, I anticipated gold to reverse, or to state it otherwise, it must not drop below that level. Which is sort of the $1,600 level down there. It must not drop below that level. If it does, well, it doesn't mean it couldn't, or it can. Yeah, of course it can. The market does what the market wants. But the problem is, if it drops below that level, we will probably see a very strong additional sell-off, because I currently, on the higher time frame, I count that as a wave 4, and as a wave 4, it should not drop below the 50% Fibonacci retracement level, which is the $1,600 level. So my view is that we've moved up in a 1, 2, 3. We're now coming down in 4, and we'll get a leg up in wave 5. Now that could happen very shortly. It could happen next year, early next year. And I believe that is why this green support area that I have on the chart here, is so critical. Gold could be one of the first asset classes to end the bear market. Maybe it's already ended, but after the first 5-wave move up, after such a long downtrend, you get the stress test, and you're confirming this assumption. So we currently assume here we are going back in a bull run. We've got 5 waves up. What we need now for confirmation that this is really the case is 3 waves down into the green support area. How is this support area formula defined? The support area is defined based on Fibonacci support levels between the 50% Fibonacci retracement and the 78.6 retracement between 1727 and 1664. If we drop below 1664, we will probably see another low, but then we could even go down to $1,000, because then I cannot, or let's say we could come down to around 1600, maybe even a little bit lower. But if we substantially drop below that yellow support area, then it can really quickly drop down to around $1,000. Yeah, so because then I don't count the retracement as a wave 4 here, the yellow one, but as a wave 2. This whole thing will be part of a large wave 2 correction, and wave 2 corrections come down much stronger than a wave 4. But at the moment, this is the stress test. This is a very meaningful support area. So getting into this area will be the absolute key test for a possible turnaround back into a bull run now. Anybody who feels FOMO already, you will have another chance to buy here if you want to. And this will be the stress test. Yeah? This was already a reversal area. Anybody who entered here had a chance to realize some profits. We talked about here that we're getting towards the end of this move up, and there will be a chance to accumulate here. Now, if you trade, that's up to you. This is no financial advice, you know that. But in a 1-2 setup, which would be bullish, this is the area where we should ideally hold support. And then we could move up next in a wave 3. Target for that wave 3, I can give you that as well. If we move up in 1, come down in 2, roughly, yeah, we're looking at the $2,000 level, maybe a little bit higher. And anybody who's frustrated with gold, there could be a really, really strong opportunity next year in the precious metals, generally gold and silver. Yeah, so I'm really looking forward to that. And that's where we are. And if we zoom in a little bit, go to the 1 hour chart maybe, then we can see that, hey, you know, wave B top could be in, and we could already be in the C wave down. And what we're doing here could be a 1, 2, 3, 4, 5, something like that in a wave C, because the C wave is a 5-wave move. Could already be the wave 1 finished here, yes, but I don't think so. At the moment, I only see 3 waves down. So it could be in the micro here, 1, 2, 3, 4, 5. And as long as we stay, and again, this is sort of micro counting, but as long as we now stay, oh yeah, okay, below 1810, so the 50% retracement, I'm in favor of a direct move down here. If not, we could stretch all the way up to 1821, but if we get above 1821, then we might get another high actually, because above 1821, it will be very unlikely that this is still a downturn. Then we're retracing too much. Then we've got probably an extension of that B wave or something more complex going on. But these are the key level. I'm currently in favor of a direct move down. We've got a nice head and shoulders, which could possibly be forming here. Yeah, so be aware of that as well. And yeah, I'm looking forward to getting into that lower area there. At the moment, be aware, we haven't made a lower low yet. So further confirmation that we are coming down will be obtained if we get below 1782. Yeah, this swing low. Then I think we are quite certainly in this move down. At the moment, we are making a lower high but a higher low. So it rather looks a little bit like some kind of a weird triangle pattern here, in which we could be for the next few days or so, maybe even a couple of weeks. So don't really know what that could be. I mean, this could be an extended B wave. Yeah, B waves can be triangles. Absolutely. So you could have here, yes, the A wave down, then in the triangle A, B, C, D, E. And then, so if this becomes, if we now make another lower high and then another higher low, this is most likely a triangle in a wave B, which would be the same outcome, but it would just take a little bit more time. Okay, and that's my update about gold. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.